Back again, guys, and the market is trying to break that triangle on the upside, however, with very low numbers. So we will see what is going to happen if it breaks the triangle, and I'm expecting it to cross this point and go higher. This point is 51,700 on futures. Now it is trading at 5660 or something. Oh, this should be better, and there will be a clear view of the candlestick charts. The market in this particular candle, you can see observe the COT ratio. The COT is not strong enough on either side. So we have to wait for that to break some point so that we can take a trade. I am watching 51,300 and 400 call options. We will go to this option chart and see. It's trying to break on the upside, but there are no good numbers. However, I'm still expecting the market to go up based on the candlestick charts. We will see the day candle. See, the day candle is very beautifully aligned and towards the buy side. The market is trying to trade above the neutral point. This is the neutral point, and trading above this will indicate a bullish structure. Look at the order flow numbers and this zero zone. Watch for this zero zone. Either sooner or later, today or tomorrow, it should be breaking that point. Probably, according to me, it will be breaking that point and heading toward this point, 51,820 on the futures. Same point where it closed yesterday. So, I want you guys to pay attention to order flow, and so that you can initiate a trade by yourself instead of taking false tips from traders who do not trade, who are amateur traders and who know a little bit of trading, and they start giving tips. If you shift on to the 15-minute candle to see what's happening on the 15-minute candle. Again, a triangular pattern is getting formed, but again, we'll focus on the numbers. The numbers are strong on the upside from the third candle. Third candle, you can see 922 and 22. So that is why another 676, and the third candle and the next candle, it is slightly there was a pullback, and this candle we have to see what's going to happen on the we will shift to 15 minutes. The 300 points difference on the part in the futures. Just because there is a pullback, we don't have a trade on the downside. It is very clear. I'm making it very clear for you guys. The trade is clearly on the upside now, not the downside. I expect a pattern like this. Or it could be like this. This. Order flow is one very important chart where, see, there is no breakout in the triangular pattern. So we have to wait. And this triangular pattern is not any confirmation. It is only we have put the flag pattern to see if there is any upside. I am expecting it to cross today's high. My afternoon should be crossing this high. This is a 15-minute candle, and the left side what you see is the 5-minute candle. I will brief you a little bit about order flow and the significance of order flow and the topics which will be covered in order flow. Closing is expected below the triangle, and the day's low should be broken for that to go further down. See, that is not trying to, it is not able to break that triangular pattern. It is moving in that very tight range. However, it has to like break this pattern sooner or later. $1,600 is where it is trading at. It is very, see, this is the point where the sellers have pushed the market down. I mean the bank nifty down. However, it tried to break this point, which could not. I think it will break it now. The next time it touches this point. However, it should be supported by order flow charts. The number should be big. Here 169, 679 is there. So I'm expecting the market to go up, and the zero COT ratio is there on the sell side, 225 COT ratio on the buy side. So based on this, I'm expecting the market to reverse. So remember, this is a 15-minute candle, not a 5-minute candle. Order flow charts are charts which are used in trading to analyze flow of buy and sell orders. They provide a detailed view about market activity, showing how many buyers are there, how many sellers are there. Not only showing the price movements, they also show the volume and intensity of the trades. Intensity of the trades are determined with delta. What you see here is the intensity of the trade, and it indicates which side the view is stronger, either on the buy side or on the sell side. Red indicates the sellers are strong. However, this COT and COT ratio also should support. Order flow, this is the order flow charts show us the real-time charts, and these are all executed charts. These are all not waiting orders, like you see in the like you see in the depth of the market. By looking at all these numbers and what I told, the delta, the COT ratio, it helps us to understand the underlying market dynamics and what is happening inside the market and what traditional price charts can show. Order flow is much stronger than the traditional or the conventional. Usually, what usually plain charts you see like this. See, this is the chart which is plain chart. We do not know what is happening in each and every candle. See, there are zero zones which I can see on the order flow chart, but not on the plain chart. So that is the advantage of order flow, and it tells us the difference between the buyers and the sellers. This is the imbalance I have selected. This is the histogram and this is the imbalance. This is the delta. So I use the imbalance, which is easy to understand. The net difference between the buyers and sellers is the delta. What you see downside is the volume profile. It indicates the distribution of trading. What you see here, distribution of trading, the volume is in the last. How it is traded in a specific time period, that is either 15 minutes or 5 minutes or whatever candle you select. See, the market is hovering at this point. And it has to break that red or green thing. Hello. 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 No, sir, really. No. No. And using this chart, we can also identify support and resistance where large volume orders are there. Based on these charts, we can see where the volume is high and where the volume is less. We will shift to the 15-minute, 5-minute chart. Market is trading in the range of 580 and 650, around 70 to 80 points. Now, this 580 and 650 is the crucial point which it has to cross, because it is kind of a band, narrow band in between the trading width. So we are trying to waiting for the big orders to come in. However, there was one big order here, but it was not supported by a follow-up candle. So we will wait for some more time. The Bank Nifty. The trend can be confirmed with this Bank Nifty, order flow chart. Looking at the delta and the max delta and the minimum delta. Delta is important though, more than the max delta and the minimum delta. Order flow gives us better insight about market rather than against the plain charts. See, looking at this chart, what can you understand? We can understand nothing. But looking at this chart, same candle, this is also 5-minute candle, this is also 5-minute candle. We know how many orders are there and how the trade is developing. And it also gives us precision. Yesterday's chart you can see for better understanding of how the market worked yesterday. See, after this point 53, there was 86, 126, and see how the market went up based on the delta. You can see the delta here 1921, 2000, 3000, 4000. That is how the market goes up. That is the advantage of charts. We'll shift to a 10-minute candle and see what is the strength unhandled. Ninja Trader closed with an unexpected error. So we'll try to open it again. This is the 5-minute candle. What I am using, order flow is an indicator developed by a company, and I am using this on the Ninja Trader platform. Ninja Trader is just a platform. It is available free of cost on the internet, but you have to buy the order flow data from NSE, from data providers, and this order flow indicator or order flow charts from the software developers, whoever has developed this indicator. Market is very lackluster today, but it will give a big movement after some time. This is Nifty. This is a Nifty chart. Nifty is also trying to break on the upside. This is a Nifty chart. The lot size is different from Nifty is 25 and Bank Nifty is 15. I will shift back to Bank Nifty. What do you make of we have to try to analyze the chart, the plain chart. What is that we can make out from this chart? It is unable to break the low of the day. The first candle is unable to break the low of the day. However, it came very close to the low of the day and did not break it. It went up. However, it has broken the midpoint of the closing of the first candle, and it is not broken the high of the first candle. So the high of the first candle has to be broken. And before that, this point has to be broken. So once this point is broken, we can take trades after this channel is broken, the parallel channel, this one and this one. Once this channel is broken, we'll go either this side or this side. It should break with large numbers. Only then the market will give a very bullish view, bullish movement. Small numbers are not sufficient to break the market on the upside or on the lower side. The numbers are slightly shifting, the delta is slightly shifting towards the buying side, but it has to break this point. This point has to be broken off 650. Yesterday also the 650, 51,650, 650 was very crucial. And it has to be broken even today. See, that is what is happening now. If it closes above this point, the market is going to break on the upside. Breaking above that point is very important. See the price action now. How the price has moved from what price? You can see how the price has moved from. See, the price was 51,400. Price was around 53. It went to 91. It went to 107 and came back to 87, 88, 89. But again, it is going to break this point of 127. Option trading is clearly active traders trade. You have to be very active and very vigilant. See how it happened. My capital investment just doubled in within 5 minutes. See, 54. I told you it will go upside and it went upside. 54 to 108. Capital just doubled. So that is the power of order flow. Otherwise, you won't get a trade like this. See, the number has increased to 500. There is still more upside. If it breaks this, there will be a blast. This is a daily candle we are seeing. If it breaks that, there will be a blast. That is for sure. But what is happening? It is getting absorbed. See, look at the numbers here near my cursor. Orders are getting absorbed. New orders are coming in. New orders are getting punched. See the change in the numbers when orders are placed. See, there was 360 here, one more order was placed. And similarly, on both sides, orders are getting placed. This is a very sensitive market, order flow, especially in the options buying and on expiry. It is very important to trade with order flow. Otherwise, usually people talk about hero to zero. It will be zero to hero, but it will be usually zero to hero, hero to zero. They will be having some capital and they will lose all the capital on the expiry day. They would have made money all the week and they will lose that money on the day of expiry, because on the expiry day the premium will be less and they will go for huge numbers and they won't know what is happening. Without insights they will trade and they will lose the trade. This is a 5-minute candle. Again, it is trying to break on the upside, but it is not crossed this blue line, guys. Remember, if the blue line is crossed, there will be a blast. As I told you, the blue line is placed somewhere here in the other chart. But I am expecting this to break first. Okay, we will place it here. See the big candle. Is it a trap? No, it is not a trap, because the market is still in the verge of going up. Those who want safety can trade in futures rather than trading in options, because one small red candle will eat up all the premium, and as and when it approaches 3 o'clock, there will be big movements with small volume spikes. See, it is trading in that particular range, although it tried to break that point. This is the bank nifty. Although it tried to break that point, it is trying to still not sufficiently or decisively breaking up that point. It is still hovering at that point, and the next this point days high has to be broken, and then this high has to be broken. Then we can think of something big if it holds on that points. But either sooner or later, early in the morning, I told you guys that it is going to break the day high. Based on the smart money here, they will take the market up either in 1 hour or by 2 o'clock, they will take the market upside. That is for sure. Based on these orders and zero zones, they are not going to let go this orders dry away like that on expiry day. It has to break this point, but the number is not good enough to support. Yes. We had one position in 51,400. We exited with around 60 point profit. I showed you on the price action movement. There we exited somewhere in between. 51,400 call option. If there is a dip which towards 51,650 or 630 again or 600, we will buy it again. But based on the option premium, we might buy it this week, or we might trade in futures, or we may buy next week options. People who are watching, kindly subscribe so that you will be intimated on the next video, and also kindly provide your feedback on how you are liking the order flow details and the content of order flow and the insight about order flow and trading with order flow. You just tell me what is the if order flow is beneficial to you or not. Order flow is can be used in all segments like commodities, gold, silver, and even these pulses you can be trading with order flow. But you have to buy separate data for that. The market is very tricky. It tries to go up. Somehow buyers are trapped here, and the option premium will be eaten. They will be thrown out, and again it will go up. I will hold the live stream for now, and I will come back as soon as there is some liquidity action in the order flow. There should be some action here, or I will wait for one more candle to close. We will see whether it will break this point. The breaking this point is crucial for the market to go up. If it closes below this point, probably it will go down again a little bit till 580 or 620. Market candles will be very volatile today, especially because of expiry. Nothing is happening. The market is moving sideways, but I want a breakout here. The delta candles, as you see, is very small. We want big candles like this. You can see the 600 number, 603. Next candle, it came down to 25, and 43 and 12. That is why it is very small. We want big candles and big candles to develop. Okay, I'll end the stream for now, and then we will see what can be done. I will come back as soon as there is some liquidity, and we will see as soon as some there. I will come as soon as some there is some liquidity, and we will see what can be done. Now I will stop the stream. Thanks, guys, and kindly subscribe. Those who are watching the video, kindly subscribe. And we are starting a offline classes here. And this is a trading hub also where you can come and trade, and use our explanation of order flow and the insights about order flow. And this should be helping you guys, and kindly subscribe and share the feed and invite your friends to join the feed.